questions and we're not going to say the name of the person who put a question in the chat or the question section, so please feel free to ask the questions that you have without any concern whatsoever that people are going to know that it was you who asked the question. I think I'll start just a little bit about who am I and why am I talking about financial management. My name is Sherry Tinoco, and I am currently the Managing Director at the Washington State Coalition Against Domestic and Sexual Violence. And before my time here at the Coalition, I worked in a couple different nonprofit organizations in a variety of different roles as Executive Director, as Development Director, and in all of those positions, I worked really closely with developing our financial management processes, planning our budget, writing grant applications and budgets. So I'm very familiar with the financial processes for a nonprofit organization. That being said, sometimes people will say, oh, Sherry's this wizard of finance. And that sounds super fun and super exciting and really, really unrealistic. So I want to start by demystifying for people that doing financial management work in a nonprofit, there are rules that you need to follow. There's things that you need to learn. It does involve math. And it is something that everyone can learn to do. It is not as mystical as wizardry. There's no special magic wands. There's a lot of tools that can help you sort through the information, allocate information to make sure that everything is clear and transparent and allowing your organization to be successful. In addition to that, just to show how true that is, I'm the oldest of 3 siblings. And in high school, my brother and sister were math whizzes. So they were in the math classes like calculus and trigonometry and all of these math classes where they didn't even use numbers anymore. It was all letters and symbols and strange shapes. I'm still not convinced it's actually math. And I was the one still going, oh, let's see, 6 times 8 is 48. Right. And to take it even a step further, when I went to college, I literally chose my degree path based on the one that had the least amount of math requirements. For real, I'm not joking. So math is not my strong suit. Math is not something that I love. And I respect people who do love it. But really starting out, like if I can learn to do these things and to understand these things, anyone can learn and understand them. So I think that's enough about me. We'll start. This project is supported with funding from the Washington State Department of Social and Health Services, our DSHS contract that probably many of you have a contract with as well. And I want to make sure that people know, again, for questions that you have, DSHS is supporting this webinar and training, but we are not going to be reporting back to DSHS around any questions that people have. They really are wanting to support this as a resource for all of you who are working with grants to be able to be successful and confident in managing your finances for the nonprofit, as well as your contracts with them. The last piece that I'll say, there's a lot of information that we're going to cover today. This training, I got to do a couple years ago in person with a group. It was a lot of fun. And yes, finances can be fun. And we got to spend 8 hours together going over in depth these topics. We only have 2 hours together today. So we're going to be covering a lot of terrain very quickly. So I want to be sure that people know that you're going to get a little bit of information over a lot of key components of financial management. We're going to talk about internal controls. We're going to talk about processes, financial reports, timesheets, many more things. But really to lift up that this is not going to You shouldn't come away from this feeling like you have a full grasp on every tool or every concept that's being presented. And with that, I want to offer, I'll put in the chat before the webinar, at the end of the webinar, my email address. If you have any questions, if there's any tool that I show that you would like to have a copy of to use for yourself in your program, reach out to me, let me know. Aside from the wizard comment, I'm also known as a nerd. And in that, that means I really, really love leaning into things like this. I love problem solving and puzzles. And a lot of times, financial management is a giant puzzle. You know, if you have a budget of $1 million, you basically have a million-piece puzzle that you're trying to sort out of what money's coming in, what money's going out, and making sure that all of those line up and all the T's are crossed and the I's are dotted. So anyway, nerding out a little bit, just to encourage you, feel free to reach out. I would love to connect and talk more about what we're able to cover today. So starting off with a way, not the way. Every organization has a different blend of structure, the funding that they receive, and the outputs, the types of work that they're doing. So while I'm going to share methods and tools and parameters of organizations that I've worked with before, just really want to lift up the fact that there are many different ways that a system can be constructed. As long as the system that your organization puts in place has standardized policies and procedures that your agency follows, those policies and procedures are in writing, that you're applying them consistently when you do your work, and you have the ability to be transparent about those, whether it be with your funders, with your board of directors, with your coworkers, or with an auditor, then the system that you have in place can look different than potentially the system that I might talk about. So just know that if I'm sharing a tool or a way of doing things and you're like, uh-oh, we use something different, go back to these and remember, if it's standardized in writing, consistent and transparent, then that is a system that is going to help you to be successful. The other point that's really important with systems, we can get in a habit. I know I've found myself in the habit from time to time where I'm working in a system and there might be a part of that system that is clunky, that just really isn't working well, or we're not quite getting the information we need. And there can be a habit of saying, well, that's the way we've always done it. So we're just going to have to keep doing it that way. And I really want to push that systems are meant to evolve and they're meant to change so that they function well for what you need them to be doing. So systems can be changed. You're still going to want to lean back into these 4 different elements, but it's okay to change a system with the goal of that system working better. Starting out with systems, one of the big ones are your policies, your procedures, regulations, and laws. Each of these exist and they impact not only the way that you can do your work, but the way that you have to do your work. And not following or knowing what those are can have some pretty serious consequences for your organization, particularly the regulations and the laws that are externally driven that dictate how you can do your work. So we're going to start talking with those. So external, we have laws. Laws or regulations at the local, state, or federal level that dictate what our programs can and cannot do. Some examples are overtime pay laws. Washington State has a relatively new sick leave, mandatory sick leave accrual. There's federal regulations that a nonprofit has to complete and submit a 990 reporting form. And all of these external laws, if your organization doesn't, 1, know what they are, and 2, make sure that you have policies and procedures and practices to comply with those are situations that could really make problems for your 501c3 or your 501c status as a nonprofit organization. So it's really, really important that one, you know what those external laws are, and that you have a method that's in writing of how you're going to make sure that you comply with those laws. The other external element that dictates for a program, for us as programs, what we have to do are the requirements in the grant contracts themselves. Most nonprofit agencies fundraise and have donations, but many also have grants that come from whether it be a local government, state government, maybe federal government, and each of those contracts has a list of requirements. Those documents can be incredibly tedious to read through. I'll show you one in a moment. I believe it has, well, I'll show you in a minute, but they can be 50, 60 plus pages long, filled with language that really can be a little mind-numbing to go through. But I can't emphasize enough how important it is to go through those contracts every year before you sign them. And not only the executive director, but the people involved in the finance team at the organization really need to read through those contracts in order to know what are the things that you have to do in order to keep receiving the money, or the things just as important, the things that you cannot do with that money. Both of those situations, if you don't know, could put your program at risk of losing that funding for the following year. Some examples, like for the DSHS contract, they will have information in there around perhaps the number of full-time staff that you have to have on the project. They will have regulations around what the maximum amount of administrative costs that you can have in the grant. And insurance requirements. There's a whole list of requirements that you need to follow within those. Here's an example. This is just the header of the DSHS Community-Based Domestic Violence Program Client Service Contract. This is 64 pages long. So that's a lot of pages, a lot of information, and it's not written in a way that will keep your attention. So you have to really gear yourself up to take a look at it, and it's fine to break it into sections. The thing is, if you don't read it, what I definitely wouldn't want anyone to be in the position of is having a site visit with your funder and have the answer be, oh, we didn't know that we were supposed to do that thing. Or, oh, we didn't know that we couldn't bill for that item. That's not going to be a helpful response with your funder. And your agency is going to be liable either in noncompliance or potentially even having to pay the funds that were used back. Here's some examples from that contract itself. Page 36 of that contract has a section that says the contractor has to maintain a current written cost allocation plan, and that plan needs to clearly describe how your organization is cost allocating out expenses. So this is one of many requirements that are in the DSHS contract. It's an easy enough one to comply with, but if you haven't read through the contract to see it, then odds are you're probably not going to have that. We will talk about cost allocation and cost allocation plans a little bit later. This is another section that shows some of the penalties. Most grant contracts, they're going to have a section that will tell you what will happen if you don't follow the requirements that are in the contract. And this one, it says on 13 that if you don't deliver your work in the way that the contract required, or you did things that were not allowable or didn't meet the standards, then they have a right to recover the fees for those services. And in 14, you'll see they go a little bit extra. If your agency was like, well, we spent the money, we don't have it anymore, we can't give it back to you, then it says here that DSHS could secure repayment by filing a lien against the agency's property and collecting the amount of money that was owed plus interest. So Again, I know this that can be scary to think about, but the goal is prevention, right? Like if we know, if you read the contracts and you know the things that you can and can't do, then you're really not going to need to worry about what those penalties are. So that's the goal, prevention. The next step we move into is internal. So we have the external. Those are have tos. We don't have choice around. I wouldn't get to choose to ignore overtime laws, and I wouldn't get to choose to ignore the scope of work under the grant contract that I've signed as the executive director of an organization. Internally, however, when it comes to policies, this is set by the board of directors, and they can only be changed by board action at official meeting. And you're going to want to have policies in your organization setting the boundaries and the protections around all of the external rules and the contract obligations that your agency has. The goal is to make sure that there is a broad way to capture what do you have to do, what can you not do, without getting into too much detail about how you're going to do that. Policies are somewhat infamous for being printed out or saved on an electronic drive and then never looked at again. And I can't encourage enough how important it is to look at those policies and procedures. Make sure that they're covering what has to be done to make sure that you're meeting external requirements, and reviewing to see has anything changed. I worked at an organization at one point in time where they had a policy that not only said that cash donations needed to be securely stored. That would be an example of a policy that staff must securely store a cash donation. But this particular policy said that the donations had to be securely stored in the third right desk drawer in the front office. And in reading through that, that was created before the agency had moved into a different building. And not only was there not a desk with 3 drawers on the right-hand side that locked, there was also not a front office. So the policy, it's a silly example, but the agency technically was violating its own internal policy. And while on the surface it is a little silly and it can seem a little silly, but when you think about if a funder came in to review or an auditor came in to review your policies and they were to read that and your response was like, oh, that's an old policy. We keep our donations here now. That's going to invite a level of curiosity from them around like, well, what else is in their policies that isn't accurate? And that's the last thing you want. So I really encourage that you have a committee on your board and your finance team or your executive leadership team once a year at a minimum, that you read through all of your internal policies and make sure that they're accurate, that they're covering what you're actually doing. The next layer down from policies is procedures. Procedures are set by executive and management leaders to meet the policy requirements, and they can be changed as needed. The procedures have to comply with the policies. So back to the donation example, if the policy said all cash donations must be secured in a locked space with limited access or access limited to like key personnel, the procedure would then be where it would describe the how. So that's where it could be, if it was a procedure, maybe it was in the third drawer in the front office desk. And then when they moved, the procedure would have been updated by the staff to say, now it's in the financial manager's office in the locking filing cabinet. The ability to change procedures in live time is really, really helpful. So policies and procedures, it's really, really good to be mindful of the difference. Policies should be concise and overarching on what needs to be done. So We already did some examples. And then the policies is where you're going to want to lean into the how, the who's going to do it, the when, where, how, all of the important details. And then the other piece is, just like policies, you don't want those to be hanging out somewhere where no one looks at them. You want policies to be accessible to people, and you really, really, really need to have procedures available, accessible, and real life time for the people who need to be able to know what to do in order to follow them. So making sure that you're sharing your procedures with staff, that staff are confirming that they received those and that they've read them and asked any questions that they have, in order to make sure that what you've put in writing that your organization is doing is actually then what is happening in your organization. There's a lot of times where I've heard of programs that they haven't quite kept up to date on their policies and procedures, and they end up in a tricky situation with auditors or site visits where they have a policy or a procedure stating what they'll do, and in real life, their procedure is different. And it's tricky because the procedure that they're using might be perfectly fine. However, if it doesn't match what's in writing, then for an auditor or a site visit or a grant manager, they're going to say that you're not complying with your policies and procedures. So again, that's the last thing that you want to be dealing with, particularly if just updating that procedure would have kept you in compliance. For policies, procedures, regulations, I've got three sets of words of wisdom. The first one kind of talked about it. If it's not in writing, it didn't happen. I mean, it really did, but if you have an auditor or a funder come to your program and say, why did you do your bank reconciliations this way? If you don't have any documentation that the bank reconciliation was done, or that an executive director or finance manager looked at that reconciliation and approved it, then when you're having a conversation with an auditor or a funder, their outcome is going to be, you didn't do it. You can't prove that you did it. So making sure that you have a process where if someone is reviewing a document, they put their initials and the date on it, or they sign it. Or if you have electronic processes, that you can do an electronic timestamp showing that the person did the thing or engaged with the thing. But having documentation is really key. Funders and auditors are not going to accept you saying, oh, yeah, we talked about that, or yeah, I looked at that and I saw the report or the reconciliation report. They're going to want to have written documentation that you did it and when. The second word of wisdom, simplicity. Simplicity is the purest form of anything. I think in financial management and in financial processes, there is an ability to make those systems incredibly complex. And I just want to say that there's no award for that. If you make a system overly complex, not only is there no award, but that is a dangerous system. You do not want to be a financial manager of a system that's overly complex. You don't want to be the executive director within an organization where the financial processes are overly complex. If you can't understand how a process works, if you're outside of the finance team or within the finance team, you cannot explain it to other people in a way that they understand, that's a signal to you that it's too complicated. So as a finance person, if you are part of that team or you're the lead of the team, you want to be able to have a layperson who's not part of your organization come in and be able to clearly see and understand how you did your math. If you're an executive director and you're looking at reports or getting information from your finance team, if you can't understand clearly what the information is telling you, then you need to ask your team to create a more simple process. The third one, don't panic. Like I talked about, systems, those are a setup of how the work is being done, and any part of that system might eventually need to be changed. Some of the reasons that you might have to look at changing the way that you do your system could be a contract compliance review finding. Perhaps your grant manager came and they identified a procedure or a policy that wasn't quite strong enough for what they're needing to see for grant compliance. Um, totally fine. If it's a policy, your board can change that. If it's a procedure, your management executive team can change that. It's not necessarily a reason to panic. Now, if you were doing something that you knew was illegal or that you knew was prohibited in the contract, then I'd say maybe panic a little bit. But if it's simply that the process that you're using in your finance system isn't quite giving the funder or the reviewer what they need, that's not a bad thing. That's a normal experience of growing a system and having outside input per system. For grant managers, I really want to lift up again in kind of in the don't panic train of thought. It can be really, really intimidating when a grant manager calls you and has questions about the work that you're doing. And it's normal to feel anxious about that, but definitely want to like lift up that grant managers, really, they're on your side. They want your program to succeed, and they want to make sure that as a field, that all of the grantees are complying so that the funds that are coming in, often from the federal level, that they keep coming in and are available to the state and available to programs. So really in the maximum way that you can see them as a partner to you in the work, that's going to be helpful for you. They do want you to succeed. It is not in their benefit to just find ways for you to fail. Another thing or a circumstance where you might find that you need to change your policies or your procedures could be a financial audit finding, where an auditor is reviewing your information, they're reviewing your processes, and they might identify. It might not even be that like they identified that money went missing, like something dramatic like that. It might be that they see a gap where a way that a policy or a procedure is written leaves a little too much room for theft to occur. So they could suggest that you tighten up a procedure or process. Again, that's not a bad thing. That's actually a good thing because it's protective of your organization. Other things that might make you and your team look at changing your system or your policies, procedures is external changes to laws. I mentioned earlier the sick paid time off requirement. It's not been that long ago that changed, where there's a minimum of 1 hour for every 40 hours worked. Don't quote me on that, but I think that's it. That every employee needs to be accruing that in sick leave. So that would be an example where agencies wouldn't have had a policy or procedure around that. And those would need to be introduced because an external law changed. Or you and your team might do an internal assessment and be like, ooh, we haven't thought about this before. That the way that we're doing, the way that we're handling donations, there's actually a bit of a gap. And we don't want anyone to be in a position where there's ever a question on what happened with donations. So we're going to strengthen the process by doing X, Y, and Z. So again, not being attached just because the system's always been a certain way. Not only is that a truth, I'm hesitating because I think that's actually kind of flashing red lights. You don't want systems to be concrete. You want systems to be malleable so that they're meeting the needs of your organization in a protective way. Okay, so internal controls. Once we've got policies, we've got laws, we've got regulations, how do we structure our organization so that we can be sure that our financial reporting has integrity, that it's saying what it means to say, that we're preventing possibility for fraud, that we're complying with all laws and regulations, and just as importantly as the other three, that the way that we're operating is efficient. Going back to the keeping it simple. If a procedure or process is overly complex and overly redundant, that is not a good process. Your organization, your reputation is going to hinge upon the ability to do your business in a timely, effective way. The goal with all of these is to make sure that as a team, that the processes and the procedures are making sure that no one is ever left out on a limb, where if there is a mistake or an oversight, that's all going to come down to being one person's fault, that your procedures are protective, that every individual is covered, and that the team has a level of transparency where temptation can't enter in, or confusion or mistakes are easily recognized and remedied. So one set of protections with your financial management are physical controls. Being able to have locking cabinets or locking doors where you're physically protecting agency assets and limiting access to those only by the people that should have access to them. Separation of duties goes along with that, but it's literally making sure that one person in an organization does not have sole or too much control over a particular asset. That could be cash in the bank. If you have one person who is bringing in donations, writing the receipts for those donations, taking the donations to the bank, etc., that's a lot of opportunity for temptation to enter in, to where a person could see that they could take the money and no one would know. We'll talk a little bit later about managing temptation versus so that you can support people instead of depending on people themselves to manage temptation. The best system is one where people won't even think about taking funds or taking a donation or doing something that is harmful to the organization, because the processes are so clear that people know it would be instantly seen. That's the best kind of process. Making sure that you're doing a risk assessment. Every now and then, with teams that I've worked with before, we treat it a bit like a game or a challenge. Just going through our process, like stepping back on a balcony and watching it from the outside and seeing what are the areas that risk is entering in. And then make it a challenge. Whoever can find those and make the process better, they win. They win a prize. But again, the goal is to make sure that everyone on the team is protected and that the organization itself is protected so that they can do the work of the mission. And then monitoring procedures. Have a way that you can trust people and you're verifying that trust is merited. So it's really fostering a climate where people know transparency is the norm. Everyone is transparent because that's how everyone is protected. And in a transparent system, if I am taking a donation, I know that someone is going to verify that I handed that donation off. I'm protected. There will never be a doubt of what happened to that donation in my hands, and the person after me is protected as well. So you want your systems to operate in a way that honors and fosters transparency as a protective norm that benefits everyone. A little bit more on physical controls. Having board-approved bank signers is really important, and that should be done by a board vote and should be documented in minutes of who are the people within the organization and at the board level who have the authority to sign checks or authorize the transfer of funds. And you do want to have a mix of staff and board. It can be a mistake to only have staff signers because you don't have then, say it's the financial manager and the executive director can sign checks. If you don't have transparency where someone on the board is also part of it, then the two of you are going out on a limb where there's no one there to support you. So making sure that there's a mix. On the flip side, if you only have signers who are board members, that might make your process not as efficient as you need it to be, depending on how accessible your board members are. But finding a balance that allows for efficiency and transparency. A really important practice that people will forget or lean a little bit too much on trust is allowing people to sign their own checks. That is a practice and a process that puts way too much responsibility and risk on the person that needs to get paid than you want to have in practice. So making sure you have enough signers that if someone is paying for items for the work and they need to be reimbursed, that there are enough signers that can sign that check so that they aren't in a position where they have to. And then in the finance team, if your role is cutting a paper check or authorizing an EFT, make sure that you have the proper authorization before you issue those payments. I would say one of the biggest, this is a tough one, of making sure that you have regular backups of your financial data. Once upon a time, everything was just on a computer and it wasn't necessarily hooked to or accessible by the internet. Dating myself, but we're not in that time anymore. Right now, we are predominantly in our society online. Many programs have online QuickBooks or a different platform where super convenient, because if I'm using that platform, I can access my financial data from any system, from anywhere. The drawback to that is that a hacker could also figure out how to access that information from anywhere, from any device. And in a worst case scenario, they might take away my access to my own systems. Just this week, and I was made aware of a business in our community that experienced that. They had all of their systems, finance systems, scheduling systems, workload systems, all in the cloud. So people could access that within the organization from anywhere and keep the organization moving smoothly. Well, a group of savvy hackers figured out how to take control of those systems and remove that control from the organization. So Monday, everyone was going to work. They could log into the systems. They could do the work that the organization needed. On Tuesday, they tried to log in and they got an error message that they weren't authorized to access their own systems. You can just imagine the level of panic that created. No access to their financial information, no access to their schedules, no access to their bank accounts. Everything had been taken over by this group of hackers who were basically ransoming that if they wanted to be able to have their control back, they needed to pay this really high amount of money. Even more unfortunately for that organization is that they did backups, but they did backups in the same cloud that was taken over. Even if you don't have a situation of hackers, if for whatever reason, a solar flare, whatever happens, and the cloud does not work anymore, You will be so happy and so grateful if you have a backup that you downloaded from the cloud and actually have on a hard drive or on a flash drive or something that is not connected to the internet. You know, it kind of terrifies, I mean, not kind of, it terrifies me to think about if I suddenly lost access to the last 7 years of financial data. I mean, you're not going to be able to add that back in again. So probably scared everybody enough. I know I scared myself enough. Monthly at least. Ideally, in agencies that I've worked at, it was every Friday. Every Friday we did a download backup of our financial systems so that if anything happened, the most amount of time that we would have to figure out how to recoup or add back in would be a number of days versus months, years, weeks. So yeah, I feel so bad for the organization that's dealing with that with the hackers right now. As far as I know, they still do not have access to their systems and are trying to sort through. Do they pay? Do they pay these people that took control away, or is there any way that they can try and do that themselves? Really, really terrible situation. Okay, separation of duties. This is the how do you make sure no one's out on a limb, and how do you make sure that there's an environment where temptation isn't coming into play for anyone on your team. For cash and assets, which assets can be donations that community members bring in, it can be money, it can be clothes, it can be any number of things. But you're going to want to have a process that when an asset comes into your organization, that there's two touch points as it moves in your system. So, for example, if I'm at the front desk and someone brings in $100 bill, I'm the first touch point. The donor is giving me that donation. I'm going to enter that into and for the organization I was at, an electronic receipt database. So it's going to mark my name, the amount, the donor's information, and it's going to have a timestamp in that of when I took possession of that money. And then when I give that money to like the financial manager, they're going to go into that receipt and they're going to mark, again, it'll be time stamped with their name that they received that money. When the financial manager prepares the deposit to go to the bank, the executive director is going to sign off that they see, oh, there's the $100 that I see was received on such and such a day, and it's going to the bank now. So you've got a clear and easy pathway showing where whatever, if it was $100, if it was a box of shampoos, you're going to be able to see how it moves through your organization, and you're going to remove ability for temptation. On this, again, separation, whoever is filling in the receipt should not be the person who takes the money to the bank, should not be the person who does the bank reconciliation process. You're going to want a system that embeds that transparency and a trust and verify. You can hold both. And when you do, it actually creates a team environment that just feels really safe and supportive. We know we can trust one another when we also know that what we've done is verified, that there's never going to be a question about our work or what happened in any situation. One example, a lot of things I learned the hard way anyway, but I was a new director at an organization and recognized that there was a system with the finance person at the time where if a donation came into the organization, the instructions were that the person who got that just was supposed to take it straight to the financial manager. And then the financial manager would fill out the receipt, and then the financial manager would take it to the bank. That process was a process. People were doing it and following it. But unfortunately, it turned out that the financial manager was not creating receipts for many of those cash donations, and those cash donations were not actually making it to the bank. So we had a situation of theft in our organization, which created all kinds of impacts, having to um, research and figure out the scope of that theft, as well as terminating an employee and just creating a lot of fear and anxiety within the entire team. So backing up on having a process where that's not even a possibility is so, so important. Risk assessment. Have regular conversations with your team around transparency, why it's protective, not punitive. And then as a leader, and I am a firm believer, everyone is a leader. In your work, whether you're an executive director, finance manager, a receptionist, a volunteer, we are all leaders in showing how things are done and how to use the practices. So whatever role that you have, model transparency consistently. And then monitor your controls within the organization. Make sure that your procedures are in writing and that people have them and or use them. Review them and update them, and don't let them gather dust. In an organization where I was at, we would pick a policy or a procedure each month, and we would read it together and talk about it. Make sure that it's not not sitting in a drawer, sitting online where nobody knows how to find it. And rinse and repeat. Keep them alive. Make them documents that your organization knows where to find them. They know they exist and they know what to do. I'm going to pause for a second and see, Pam, have there been any questions that have come in the chat?
Not yet.
Okay. Let me do a time check as well. We're doing good. I'm going to do a few more slides and then we're going to take a quick bio break. So if anybody is like, oh my gosh, when is she going to stop talking? It's soon. We'll have a quick break and then come back, but I'll finish this section first. So operational efficiency, be curious. As I mentioned, the team that I worked with before, we made it. I mean, the game is a little strong, but we were playful with it. We were curious. We would imagine what are scenarios where mistakes can happen or foul play could occur. We would test our systems and make sure that they were working how we intended for them to work. And if we found a weakness or we found a gap, then we would change it. We would adapt our system, making sure that that system was serving us, that we weren't just serving the system because it had always been that way. And it made something that is otherwise tedious a little bit of fun. Okay. So I think this is where we're going to do a break. Before we go into the why, I just downloaded to you so much information around policies, regulations, how to set up your systems. And I want to make sure that people get a chance to stand up, get a bio break, be back. So my clock shows that it is 10:51. How about we take 5 minutes and come back at 10:57? Okay. So this will be a fun section, and by fun, I mean kind of terrorizing. Remember to breathe. We just moved, but we're learning about this because it's important. And our focus is going to make sure that none of us at any of our organizations ever find ourselves in this situation. So embezzlement, fraud, or misappropriation of funds, which in a nutshell means people doing things they shouldn't and taking items that don't belong to them. A study by the Association of Certified Fraud Examiners found that every year, 5 to 10% of nonprofits experience some sort of fraud. And when you expand that out to a 5-year period of time, the likelihood that a nonprofit, any particular nonprofit, is going to experience incidents of fraud increases up to 30%. So it's really, really important that we be aware of that in our organizations. And again, going back to making sure that we have policies and procedures that reduce the risk and the ability for any individual to commit these. Some examples of recent examples of where this is are, here's some headlines. None of us, they say all news is good news. I can guarantee you that is not the case. There are some kinds of news that you do not want to be in the headline for your organization. And unfortunately, for some of these, here are some of the headlines where organizations, people within organizations were caught, discovered to be committing fraud, stealing from the organization. And that's a position that you definitely don't want to be in. Nonprofit organizations are mission driven. The missions are important and they matter. And the last thing that you need to be disrupting that is a situation like this. Probably in finance, most people know that annually as a nonprofit, you're required to fill out a 990 form. And one of the items that you have to report on is if your organization had what they call a significant diversion of assets. What that means is 5% of your annual budget. So for an organization with a budget of $1 million, if there was a loss or a theft that exceeded $50,000, you would have to document that and report it on your 990. The 990 goes to the Internal Revenue Service, the IRS, but it's also posted online to where anyone with computer and internet access can search for your 990, open it up and read it, and see information about your organization. So you really, again, you're not going to want to have a major donor who's researching your organization. Potentially they want to support you. You're not going to want to have a finding of fraud on that report. How nonprofits can protect against embezzlement and fraud is an article by Wiley. And it talks about what are some of the situations, the features that are unique to nonprofits that make them more susceptible. Nonprofits get a lot of donations, hopefully. If we're doing things good, we're getting lots of donations, and we generally have a number of grants. Second is no one wants to pay for overhead. There's limits by funders and oftentimes by donors of how much of the money can be used for overhead. And that might end up meaning that there's not enough staff on the team to properly manage the flow of funds. And then the culture of nonprofit organizations. People in nonprofits generally are very close, oftentimes refer to one another as family or friends. And while that's a good thing, if you have trust without verify, then that level of trust can lead managers or directors to overlook compliance areas. Another discipline that leaned into looking at fraud was a global study was done on nonprofit fraud. And they did a deep dive into more than 2,500 cases so that they could share takeaways for programs of how to know what are the similarities and how to prevent. And in that, they found some really interesting information. One, they looked at who was the individual or the level of authority that an individual had that committed the fraud within the organization. And 39% of cases were the executive level leadership. 35% of the cases were a manager or supervisor, and 23% of the cases were an employee at the organization. Along with those splits, you can see the value level of the assets that those individuals were able to access based on their position, and they get significantly higher with the amount of access that the individual has. The method of fraud, corruption, which is is stealing, and then some of the forms on that. Were they stealing cash? Were they filing false reimbursements to get paid for things that they actually never bought? But here's a breakdown of that. Really important to our kind of work was like, how was the fraud detected? How did the organization find out? And the number one, the highest reason was a tip or complaint, oftentimes from an employee within the organization. So again, fostering a culture where transparency is the norm, not only hopefully prevents this from happening, but also creates pathways where people know, hey, we have a procedure that we're supposed to follow. I noticed that this person did not. Going back to the example that I gave about a previous financial manager who was stealing cash donations, the way that I found out about that was by another employee who had come to me because she had gotten a cash donation, and she noticed that when she took it into the financial manager's office, that the financial manager didn't write a receipt. She simply put the money into their desk drawer, and that struck her as odd. So she came to me and she mentioned that. She didn't accuse the financial manager of stealing. She simply said, hey, I noticed this and it seemed strange to me. And that tip is what led me to go and look at the receipt book. There was no receipt for that cash. To look in the drawer, there was no cash in the drawer. But the employee tips is going to be the number one way that, as a finance or an executive person or board members, if it is the finance or executive people, that they're going to find out. And then the top three weaknesses that were identified: lack of internal controls, lack of management review, so the verifying, and then overriding of the existing internal controls, people not following the procedures that are set out. And then they offered the recommended steps, and they're going to sound familiar: create a positive, transparent work environment to make sure that people know what they're supposed to do, and they can point out when somebody is not doing that work. Create or update monitoring procedures so that you're verifying that things are happening the way that they're supposed to. The other thing that they recommended, which is really, really smart and a good practice in two ways. One, it's good for people to have time off from work, take a vacation. So personally, it's good to make sure that people are able to do that they can disconnect. For an agency itself, if they recommend 5 to 10 days as the ideal amount of time off, and they do that because that's enough time for someone else to need to fill in for the work. That ideally, that's going to verify that the work is being done with the processes and procedures like it should, or it could also show some red flags. Which they say the biggest red flag that they see is a person who will not take time off. Now, as a manager, it might be they literally are too busy and they cannot. And that's an area then where you're going to want to lean into and make sure that they have the ability to rest and to be sick and to go on vacation. The red flag side of it is sometimes a person does not want anyone else to see the way that they are doing things. So there's a win-win. People can be cared for, and you can verify that the processes are working. Other red flags: people who insist on working alone. They just do not want or will not allow other people to be involved in the processes or to see what is happening. Restricting access to information, and then two, one, they put living above their means. If they're showing up to work in a brand new sports car that just doesn't quite seem to match reality, that could be a red flag. And then the last one: major life changes and financial distress. That is another place of like really being into making sure you have processes that reduce temptation, but also allow you to lean in and support people. They mention things like divorce or death in the family, situations that are really throwing an individual for a loop and might increase either their temptation or their need for money, but it might also just put them in a compromised place where just following processes are more difficult, and it might not even be an intentional error. The most important thing, make your system manage the temptation so that you can be there to support the person. And a little bit of a broken record. Transparency, practice it, model it, make sure that your systems support it. Looking in the chat, we're going to switch into some tangible tools. Does anyone have any questions about regulations, process, procedures, transparency before I move on? And if you have questions, just drop it in the chat. I promise that we will not read your name for the webinar, but we'll read it out loud without a name and then answer. Okay, I'll keep an eye on that, but we'll move into financial reports. The three main financial reports that nonprofits use are profit and loss statement, balance sheet, and a profit and loss versus budget. And they each serve a very different purpose. Profit and loss statement, that's going to show generally for a 1 month period of time. It's going to show your income and expense amounts, and it's going to show the resulting net profit or loss for the month. So on this one, I know it's super tiny, it's probably hard to see, but up at the top, you've got your income sources and your gross profit. And then at the bottom, you're going to have the total of your expenses. And then I lifted it up here just so that it shows up a bit better. On this one, you can see that this organization's financial report is showing that they had a net loss for the month of a little over $17,000. The key thing with a profit and loss statement, it is almost always a 1 month period of time. And so it is giving you information, but it's giving you an information without much of a backdrop. So for example, this report, the negative 17,000 could be a little bit scary of like, oh my gosh, what's happening? Are we bleeding out money? We're not going to make it to the end of the year. It's important to remember that this is a one snapshot, and you're actually going to want to look at your profit and loss versus budget to get a full picture of what is happening with the financial health of your organization. Looking at that one, profit and loss versus budget, those will generally be year to date. So if your organization functions on a calendar year financially, then it's going to show from the beginning of your year to the last day of the month of where you are. It's going to show how you're doing financially with your income expenses, and it's also going to compare that to your budget for the year. If you have a fiscal year, it's going to do the same thing, just the periods of time on the report are going to match your fiscal year. So this one even smaller, but you will see on here, this is for an organization that has a fiscal year that goes from July to June, and this is a report from July to May. Over here, you can see that represents 92% of that agency's year. You also see there's a column here for the budget that says this is the plan that the organization had for their money for the entire period of time. And it has the net income. So going back to this one, I don't think I did a call out, but their net income for that period of time is $183,000. So if we remember that the 1 month had a loss of 17,000, this report is actually giving a fuller picture that says, okay, 17,000 loss, oh no, that might be bad, but actually the organization is doing really well. They have a very robust profit for that period of time in the year. Another thing that this report does is when you have the 92%, that's your benchmark of where you are. These percentages will show you how a particular line item is performing. So for income, any number that's higher than your point of time in the year is a good thing. So for this organization, they are 208% of their fundraising goal for the year. So they've brought in double the amount of fundraising that they plan to. That's super exciting. And then other grants, they're 370%. So anything income-wise that's higher, that's a reason to celebrate. Flip side on the expenses, any number that's lower than means that you're doing well, you're on track. The part that I would add on that can be a little bit tricky though is make sure that you're paying attention to the size of the line item. So for example, on this one, board expenses, it shows that it's 134% of the budget. So it's over budget by 34%. 34% is a large percentage number. However, the budget itself is $250. So that 34% equals, just eyeballing it, about $70, right? That's not going to be an area of concern or panic. On the flip side, most nonprofit salaries are going to be your largest expense. For this organization, it's 1.3 million, almost $1.4 million of salaries. If you're off by even 1%, that could be thousands and thousands of dollars. So it's really important to not only see what percentage you're running on, but the size of that budgeted line item. And then the third report is the balance sheet. This one narrows it down even further. Balance sheet shows your financial health of your organization on one day. So if you run a balance sheet on Monday and Tuesday and Wednesday and Thursday, you're going to have 4 different reports showing what your financial health is. Generally, you're going to use the last day of the month prior to show what the status, the health is, best way I can call it, of your organization. It's going to show your assets. So those are things like how much money you have in the bank, accounts receivable, how much money do other people owe you, and then the flip side, liabilities, how much money do you owe other people. It's also going to show your restricted funds. Now, it's really important to know that with restricted funds, oftentimes grants, the funds that you get from grants will be restricted in that you can only use the money to provide that particular service. So like the DSHS shelter grant. If I'm working at an agency and I get that grant, I have to use the money for that purpose. I can't use those grant funds to do a Sexual Assault Awareness Month. Those aren't going to be eligible to the restriction around those funds. Donors also can restrict their funds for a particular use. I remember an agency that I was at before, we had a donor who was very generous, and like every time they would donate, they would give us $1,000. But they would say that you can only use this $1,000 to buy shoes for children who are staying at the shelter. So when we receive that $1,000, we have to be able to track it within our financial system and what it's for, and then also track when we're spending it, that we only used it to buy shoes for children. Be very, very careful that you don't accidentally restrict your funds when you don't actually want to. This is a situation that can come up during fundraising efforts where, let's see, for example, I could do fundraising and say, all of your donations, you being community, if you donate to us during this fundraiser, we're going to support women and children in our shelter to be free from violence. If that's the way that I am speaking to the community about raising funds, then I'm inadvertently restricting how I can use those funds, in the sense that I can't then use that money to support sexual assault work, or I can't use that money for prevention work. So sometimes you do want to restrict your funds, but if you don't want to, be very, very careful in how you're speaking to the community. In that same example, if I wanted to fundraise just to offset the areas that we don't have grants for, then I'm going to want to make sure that I'm telling the community, please help support our work. we have programs that provide shelter, that provide support for victims of sexual violence, that do X, Y, and Z, and your money is going to help us, round out our services and make sure that support is available to people. Keeping it broad enough to where they know what they're donating to, but you're not accidentally creating a restriction. I saw a news article today, actually, of an example. Southern Poverty Law Center, I think yesterday was indicted on federal fraud charges. And it stems from, I'm sure there's a lot of political pieces that we won't get into, but it lands on the fact that when the law center was raising funds from the community, they did so in a way that when they spent money, they weren't compatible. So I'm not saying this very well. What was discovered was that the Poverty Law Center was using some of its donations to pay informants that were inside hate organizations such as the Ku Klux Klan, so that they could get information about plans to cause harm. And they were using their donations from the community to pay for those informants. What the Justice Department is now challenging them around is that when they raised money from the community, they said that they were raising raising funds to support their court work efforts. So even though donors who gave that money, they might be perfectly happy with the way that the law center used those funds. But the law center themselves said to the community and the donors what they were going to use the money for, and then they did something else with it. So it's just a word of caution in that. Okay, we're going to get into some nuts and bolts. Cost allocation. So we're done with the scary stuff. So shake that off. Cost allocation. That's the way that we figure out within our organization of how much money we can charge to one grant for a certain expense versus how much we can charge to another. The goal is to make sure that no source is paying more than their fair share. Why does that matter? Because our funders tell us it matters to them. They require in our contracts that we have a cost allocation plan and that we follow it, because they don't want to pay for anything that doesn't fall into the scope of work that they're contracting with you for. There's a few different ways that you can cost allocate within your program. One of the most common is square foot allocation, and that's literally taking the size of your building and then splitting those costs by fund source and program based on how much space each of those programs is using. I'll do a kind of a silly example. I don't know if Susie's on the call, but I think Deidre is. And it's probably a surprise to them, but decided that we're going to rent a house together. So we're going to be roommates. And I found a house for $1,800 a month. So we're gonna figure out how much each of us should pay. Seems pretty simple, right? The rent is $1,800. There's 3 of us, so we're each gonna pay $600. Sound good, Deidre? Sound good, Susie? It makes sense to me. But here's the house. I'm guessing that Deidre and Susie are probably not going to be super thrilled with paying the same amount that I do when I have a master bedroom with a master bath and a jacuzzi tub, and they have tiny little bedrooms with a shared bath. Our contractors feel the same way. A lot of programs, you might have a domestic violence shelter in the same building where your staff or other programs work, and they're not going to want to, the sexual assault funder is not going to want to pay for expenses for the domestic violence shelter if they're using the majority of the space. For cost allocation, I'm going to go through this really quickly just for amount of time, but any of this. If people have questions, email me and I'll go through it. But square footage, you're going to want to create a map of your building and then do the measurements of the space so that you can apply that to whatever your expense item is. So for example, you're going to take the length of the building, which in this one is 45 feet, and you're going to multiply that by the width of the building, which in this example is 20 feet. The total square footage for this house that we're renting is 900 square feet. When we take the amount of rent and divide it by that number of square foot, we can see that every square foot has a value of $2. When we do that, you can measure each room, each space, and come up with a map that calculates the number of square feet times the $2 per square foot and come up with a dollar amount. And when we do that, we'll see the shift between an even split that Susie, Deidre, and I are paying into the cost allocated split based on the amount of space we have access to, where Susie and Deidre are paying $400 and I'm paying $1,000 to have the master bedroom with the master bath. And contractors are going to want to be able to see that for your program and your facilities as well. One of the easiest ways to do this is a chart from a program that literally lists out the rooms that are in the facility, how many square feet they are, and it has a pie chart in it that shows, that the shelter has 73.3% of the space, and that non-resident services is almost 20%, and then the admin, it doesn't have its label, but whatever the difference is. The easiest way to allocate costs is actual costs. It's a second form. And you can only use that for expenses that you can literally tie the full expense to a particular grant or project. Some examples would be actual hours that someone reports that they work under a particular grant. Program-specific materials, like perhaps a brochure that is only for the sexual assault program, where you could then bill the cost for that brochure fully to the sexual assault program, and you wouldn't want to split that out to the other programs that aren't paying for it. And then items, like maybe it's a laptop that the person who does domestic violence services only uses that laptop. That might be another one that you can bill it using actual costs. You can have some other methods of cost allocation. The only one that I'm personally familiar with using was an agency that I was at one point was required. They had enough federal funds to require an A133 audit. Those are pretty expensive, but we did a cost allocation plan from that each grant source that contained federal funds, we used the percentage of that to then bill that cost to those grants. So grants that didn't have federal funds, they were not paying for the federal audit. One of the most common cost allocation methods is the FTE, or the full-time equivalent. And that's where you take the number of full-time equivalents working on a specific grant or a project, and you get the percentage of FTE that you can then apply to a particular expense. Once you create your cost allocation plan, you decide, like the list, I've done some examples here, it's not comprehensive, but examples of the kinds of costs that I might put under as an FTE cost allocation, like general supplies, liability insurance, telephone. Ones that I would put under square foot that are related to the amount of space. Those could be utilities or rent or cleaning costs. And then the actual costs. Once I've created those, I want to document it so that I can show that that's the plan that I'm using, and then I want to stick to it. It's really, really, really important that you do not take an expense line, like let's say, oh, come on, Sherry, this shouldn't be this hard. Say benefits. If I'm using FTE cost allocation for medical benefits, I do not want to bill it that way in one grant and then turn around in another grant and bill the actual costs. Um, that would get me in trouble. You want to make sure once you've decided how you're using a cost allocation that you keep that consistent across your different grants. I've got an example of a tool on screen. It's going to be terrible, but if you're interested in it, I'll share the link for the spreadsheet with you. Cost allocating tool. Um, this will show the method, sorry, the method of cost allocation that I'm using for the different expense types. It's showing the staff people that I'm funding, as well as the amount of time or dollar amount that I'm paying for each staff person within a particular grant contract. Then in this column B, you can see for liability insurance, the expense divided by the total number of staff equals 3,125 per person. It will auto calculate with the amount of staff that are in a program to then calculate the amount that that program owes for that expense based on the number of FTEs working in the program. The beautiful thing about this, there's a lot of math happening behind that, which I've already said, I'm not a fan of math. The beautiful thing is the spreadsheet does the math for you. And each year you can rinse and repeat. Use the same spreadsheet, the formulas will stay intact, and you just update your numbers each year. Cost allocation, almost every element of cost allocation, you're going to require timesheets. I put screaming clocks just because timesheets seems to be the bane of so many people's existence, where the most problems come up. Timesheets are meant to be an accurate and verified picture of what each person on your team spends their time doing. And no funder wants to pay for someone else's service, right? That's the key of why do funders want timesheets? Because they want to make sure, just like in renting the house, they don't want to pay for the master bath that they can't use. Funders don't want to pay for a staff person's time that they didn't get benefit from. Timesheets, in order to work the way that they're supposed to, they need to have the following information. Needs to show the number of hours that the employee worked in the pay period. It has to show the type of work that the employee performed with those number of hours. The employee needs to sign verifying that the information is correct. That's very, very important. If they didn't verify it, then it goes back to that magic trick. If it's not in writing, it didn't happen. You need the employee to verify to you that the information is true. It needs to track lobbying time. I don't think I pulled up the example in the contract I showed, but almost every government contract is going to have a prohibition that you cannot use their funds for lobbying time. So you're going to want to have on a timesheet, even though most of the time a person's answer will be no, you're going to want to have on the timesheet where they're verifying that they did or they did not spend some of their time lobbying. And the same is true for fundraising. You will also find out in the contract parameters that they won't pay for your staff person to fundraise. And with social media and sharing that we do online, you definitely don't want your funder to see the person that they're paying for at a fundraising event without them being able to go look at the timesheet and say, oh yeah, they documented on there that they were fundraising and they didn't bill us for that time. Then you're golden, right? But if they do that and they see that 100% of their time was billed under their contract, yeah, you're inviting some extra curiosity from the funder. That's not going to be very much fun. The other piece that you're going to need to have on there is tracking of their overtime pay, if they had any, as well as their sick leave or paid time off. for compliance with those external regulations. A piece that I lift up, there are some organizations that, well, I'll do that in a second. Here's one example of a way to do it. So if your organization has an actual time card system where employees are clocking in and out and you can see the number of hours, you could use a tool like a payroll verifier. Then the payroll verifier the employee is going to be able to indicate the type of work that they did with their time that's represented on the timesheet, as well as the percentage of time for that. They're also going to confirm that they agree with the pay statement that's in the time card system. For this one, it's ADP, but there's so many time card systems. But you need them to confirm that the number of hours represented on their time card, that is accurate to the number of hours that they worked. And then again, with the fundraising, they're indicating here whether they did lobbying or fundraising. And if they say yes, then the section down here, they can detail for the finance person how many hours and what type of service. That way, the finance department can make sure that they're coding those hours to something other than a contract. Maybe they're using fundraising dollars for that, or donations that aren't restricted. And super important, needs to be signed by the employee and by the supervisor. Oh, this is an old school, right? The whole time. Am I still here? I just had a strange noise. Can somebody indicate to me if I'm still here? Okay, well, I see a thumbs up. Old school timesheets are fine. They work. They're not my favorite, but they work just fine. On this, instead of having an actual time card we're clocking in and out, the person is going to be, in this case, it's me. I'm going to be indicating on every single day how many hours I worked in each kind of work that I did. And that's going to total up at the end. I'm also capturing my paid time off. I'm signing it. The little circle that just popped up, if I had lobbying or fundraising, I'm going to use one of those empty columns to indicate that. The key point, the thing that I was going to said I would come back to is in looking at this, we can see it really well. Some organizations will put, like on this one, the type of work that an employee did. So if I'm the employee and I'm filling it out, I'm going to be able to say, okay, I was supporting domestic violence clients or doing domestic violence outreach, or I was helping someone in a crime victim service program, or I'm working with a sexual assault victim. I can very easily, as an employee, tell you as the finance department what kind of work I spent my time doing. Some organizations, instead of using type of work, they'll actually list the grant name on the timesheet. It's an easy shortcut for the finance department. However, I say proceed with caution because it does present an opportunity for liability. For example, if my timesheet, instead of saying DV, said John Foundation, I, as an employee, I might not know what John Foundation means to my work, right? Or if instead of CVAP, it says Mary Foundation, same thing. I could have all of these grant names on my timesheet, but as an employee, I'm not going to be able to tell you how my time split into those categories. And the risk with that is, say you're executive director, you're a finance person, and an auditor comes in and they pull my timesheet, and they ask you, okay, I see that you billed X amount of time to my foundation. I want to talk to your employee. If when they talk to me and they say, okay, I see that you put 30% of your time to my foundation,
Um, how did you know to do that? You do not want my answer to be, well, that's what my finance person told me to do, right? Because I'm verifying that what I put down is the actual representation of what I did. And if the way that the timesheet is set up does not actually allow me to do that, you're really inviting in that space of liability where push come to shove. My answer is going to be I wrote down the numbers that my financial manager or my executive director or my supervisor told me to. And I mean, I think you can see the liability in that. Um, I am a huge fan of putting on people's timesheets the type of work that they know that they do. And then on the back end with the finance team, knowing which contracts will pay for that kind of work. That's a guarantee. If an employee is ever asked, they can tell you. They can tell you what it means to do domestic violence work. They might not be able to tell you what it means to do Mary Foundation work. Let me check for questions. Okay, we're in the final stretch. Hope people are still here. Budgets. So we have a combination of budgets, inward budgets, outward facing budgets, and they serve different purposes. An outward facing budget, you're going to want that to be broad and simple. That's what you're going to present to your board of directors. It's what you're going to give to with grant applications when you're searching for funds. But it's really just the overall categories. How much are you paying in salaries? Not necessarily everyone's salaries, but as a whole. What kind of grants are you getting? Not every single kind of grant that you're getting. And then your inward budget, you're going to have a detailed view that gives you a pathway to zero, right, to balance. So you're going to know every grant, every staff person, every expense, and how those tie together. The third kind of budgets that you'll deal with are the actual grant budgets with funders, where you're telling them how you're going to use their money. This is an example of a budget for the DSHS shelter grant. You can see the categories are very broad. It is the total amount of money that will be spent on salaries, on benefits, and goods and services. To use that in a finance team, it's not as helpful, but for the funder, that gives them for monitoring. They know how you've said you're going to spend the money. This is an example of the outward facing budget, where you can see again general categories, total number of wages, total number of income sources. I pulled this one in particular to note because a lot of grants that people get are reimbursement based. Every now and then you'll get a foundation that will give you a lump sum up front. And when they do that, you're going to have a budget that will show as a negative. I'm going to pull that section a little bit larger. So you can see this organization, they're budgeting to have a net loss for the year of $200,000. And that could be very startling, whether it be a donor who's looking at that, your board of directors, maybe yourself as a staff person. But you can see this little call out box that it's showing the funds that were already received by the organization that were restricted for a particular use. And so that $200,000 loss is actually not a real loss. It's simply the use of money that the agency received ahead of time. This is a copy of like an internal facing budget example. This is your roadmap for your finance team, for your director. It's going to take every dollar in your $1 million piece puzzle and show you where is it coming from and where is it going to. In that, you're going to have a list of all of your expenses running down the columns. And then in this row, you've got a list of all of your income streams. And then all of the meat in the middle is showing where those connect, which grant is paying for what portion of which expense. These budgets, I rarely, if ever, share them externally simply because they do contain so much information, some of which might be sensitive. Like if you have a donor who doesn't want their name necessarily shared publicly, they want to be anonymous. If you've got information about them in your budget because you're tracking their funds, you're not going to want to share that out. You might not want to share out all of your staff salaries by name in a public way. So use it as an internal tool, but unless you really need to dig in deep with an auditor or a funder, it's not a tool that you're going to use externally. Some key pieces about a budget. A budget is a plan. It's not a strict roadmap. Reality happens to us. At the beginning of your year or before your year, you can have a vision of what you think is going to happen, and you're putting your money in your budget based on what you think. And then real life is going to happen. The roof might start leaking, or the car breaks down, or somebody left for a better job opportunity and you have a vacant position for 6 weeks. There's a lot of realities that will happen that changes what you thought would happen from the beginning. And that is completely normal. It's completely fine. It's just important to remember that budgets are changeable. If you need to amend your budget because you got a new $250,000 grant, your board of directors can amend the budget and add that income and expenses in. And your funders can approve amendments to the budgets that you've submitted to them. So just remember, sometimes it can be a habit to stay too strict on what you wrote at the beginning and think that it can't be changed. Really want you to remember that it can. There is flexibility as long as you're going to the right people of authority to ask for those changes. For budgets, the software that you use, you're going to want to make sure that you are using accounts, classes, and project functions within your system. The accounts represent the broad expense type, so like rent. You would have one account that's rent. You're not going to want to have domestic violence rent, sexual assault rent, CVSC rent, right? You're going to use your class function to do that piece. The account will say what kind of expense it is or income, and the class is going to say who does that expense belong to. And then if you use the project or program function, that can give you kind of a farther out view of like how much does your domestic violence program cost, right? Like it can lump in all of the different funding sources that you're tracking by class to tell you how much the full domestic violence budget is. When you're creating your budgets, start with that inward facing budget first. Really map out for yourself how the money's going to work, and then use those numbers for your grant budgets when they come in. And then use that one to create your board facing, outward facing budget numbers as well. It's really, really important to make sure that all of the budgets are in agreement with one another. When I first started in an organization, I was going through their grant budgets and I totaled up the amount of money that was allocated for supplies among the different grants. And it was, I think it was like $10,000. But then when I looked at the board approved budget, they only had $3,000 in supplies. So there was a disconnect between what was being written to the grant managers and what our board actually had approved for us to do. So you're going to want to make sure that you start with your internal budget and then use that to feed all of the other budgets so that you're not in a situation where you have multiple budgets telling your finance team and yourself multiple different things. And then budget tracking. You're going to want to pay attention to your budget, how it's performing against your actual with that profit and loss versus budget. You're going to want to look month to month. You're going to want to pay close attention every quarter to identify what areas that you need to keep an eye on. The first quarter of your year, you can start seeing which areas you're either overspending or underspending with a grant. And that's going to give you a heads up of what to keep looking at when you move into quarter 2 and when you move into quarter 3, when you might need to start asking for amendments from your funder. You don't want to wait until the final month of your grant to do your review and check and see where you stand. One, because if you have a sizable amount of underspend, you probably won't be able to create a plan in a 1 month period of time to spend it. And funders are in a tricky situation. They really need us as programs to spend out our grants. If we don't spend out our grants, it gives the appearance that the money wasn't needed. So our grant managers and their departments, when they're asking for a continuation of those funds, if they can't show that programs use them, it will appear that the message is that programs don't need their funds. So really can't emphasize enough how important it is halfway through the year to be looking at your spending, make changes as needed, and then that final quarter, as you're entering the final 3 months of your grant, make sure that that plan is working. Contact your grant manager around how you might want to use the money differently. Again, they're there to help you and they're there to support you. Here's an example of a class report that you can pull from your financial system. It's similar to the profit and loss versus budget, but it looks at a specific fund source. So this one is pulling from a specific contract. It shows the percentage of time through the year, and then it also shows the spending of how that's matching. So on this one, you can see it's 75% through the year. Overall, the contract is spent out at 73%. So we know roughly that 2% of that contract needs a new plan, right? And that would give me and my finance team the opportunity to start looking at, okay, how can we spend this money over the next 3 months so that we're able to zero out our contract by the end of the year. Our billings really are an extension of our budget that we submitted to the funders. So it's really, really important that when you do a billing, that you only bill for what you included in the budget. If you did not add supplies in your budget, you're not going to want to put supplies on your billing. Again, you can check the rules for amendments or what the threshold is for you to move money between the categories that you did put on your budget. But if you're wanting or needing to spend something, spend the money in a way that you didn't put on your budget that you submitted, it's really, really important to reach out to your program manager, have a conversation about what you're thinking to do, and then ask if that's okay. Oftentimes they'll have you submit an amendment that they'll approve, but if you talk to them first, you'll get, before you put the time into the amendment, then you'll get the idea of if they're going to allow you to do that or not. A thing with billings, like mistakes can happen. You can have the best systems, the best processes, and every now and then you're going to find out, oops, I made a mistake. The best practice in that is to be transparent and to track really clearly how you fix the error over time. I had a situation once where we had billed for a percentage of benefits for an employee on a contract that using the FTE cost allocation method, and the employee actually was not on the benefits. So we had inadvertently, for about 3 month period of time, we had billed for a percentage of benefits for this employee when there actually wasn't that expense. So in our quarterly review, we were able to catch that. We were able to see the amount we billed was higher than the amount of expenses we actually had due to that employee not participating on the plan. So we'd already billed for that money. So what we did is we clearly identified what was the amount of money that we billed for that, for those benefits that we weren't having to pay for. And then we reduced our billings over the next several months to where we had eligible expenses that we did not bill for until we zeroed out that overbilling. And we documented on every set of billing along the way, showing the amount that we could bill for and the amount that we were deducting out because of the overbill. As long as you're able to be clear and transparent and show how you fix the error, when a site visit happens or an auditor comes in, they're going to be okay with that. They might have a recommendation on how you can tighten a procedure to prevent missing it the next time, but mistakes do happen. Before I wrap up for any questions, just going to lean into this again. DSHS funded this webinar because they're committed to making sure people know that, that there is support. Your grant manager, of course, they hold a position of power. They have the ability to determine whether you get money or not. But it's really, really important to remember that behind that, at the end of the day, they are there to help you. When you succeed, they succeed. If you fail, it looks bad on them. So they're very, very motivated to make sure that you have the support that you need, not only to be successful in your grant, but to do the work in the most meaningful way possible. So if you've identified an expense need, maybe client expenses that weren't written in your budget, they're going to want to talk to you about how you could do an amendment to actually do that work and support the client in a way that is really important to them. Another option, if you still feel a little bit nervous or you want to have a sounding board ahead of time of someone that you can talk to before you ask your grant manager, our coalition is a resource to you. There, anyone on our team, happy to connect with you. You can ask your question. You can preface it with, this might be a silly question, or I'm scared to ask this question. I'll tell you right now, there is no silly question other than the one that doesn't get asked, right? We're here to help you brainstorm. We're here to help you succeed. And like I said earlier, we do not report back to a funder, to DSHS or any funder about what you're asking us and telling us. We are your coalition. We're here to be a resource for you. And then peers, guaranteed, if you reach out to a trusted peer, there's someone who's been through what you're going through, and they might actually have a tool that can help you problem solve a situation that you're in. So remember, the finance work, it can be overwhelming. There are many tools that can support with that, and it's complex. And you don't have to go through that, navigate that alone. There are resources here to help. Let me check my time. Oh, we have a little bit of time for questions. I am going to say I'm happy to share this slide. I've got resources and tools that are linked within it. So if you are interested in having a copy of these slides, you can email me. I will put my email address in the chat right now. But Pam, while I'm doing that, were there any questions that came in?
Yes, we did just have one come into the Q&A. And can we please have a copy of that cost allocation spreadsheet?
Absolutely. I just put my email in the chat. So whoever asked for that, if you want to email me, anyone who wants it or the PowerPoint or any of the tools that I talked about, just shoot me an email, and I'm happy to get those sent over to you. I see that there's a question on training certificates. Yes, this training is eligible for training hours. So you're going to get an email that the email that you registered with that will have two things. One, a training evaluation, so you can let me know what to do different next time. I know it was so much information. It's going to be totally fair to say that was way too much time listening to Sherry talk. But once you do the evaluation, you're also going to get your training certificate for this time. Thank you, April. Any other questions before our time is up? Want to give a little bit of a sneak peek. My understanding is that next year we're going to do an in-person financial management gathering again. So I am super excited about that. The group that we got to get together last time and spend a day together, it was so much fun. And people that are doing finance work don't very often get a space where they can come together with their peers. So stay tuned for that. All right. Well, if there's no more questions, thank you all for being here, for bearing with all of the information, and please reach out if you have any questions or any way that I can be of support to you.